Joining us now is Clockwise Capital CIO James Cakmak. Sarat Sethi is with us on set as well. Both are in a lot of tech names that we regularly talk about it. And James, to start off with Palantir, this is a run reminiscent of NVIDIA, say, starting sometime in 2023, but maybe faster than that. What do you have to believe about Palantir and its NVIDIA-like potential to keep buying it here?
Yeah, I mean, it's a historic run that we've seen out of Palantir. You know, when we first bought it back in the $20 range, you know, the way we thought about it then was that every new contract that they received added about 3 to 5% to the top line revenue growth. So you could back into a multiple that was much cheaper than it appeared on surface. Obviously, now in the 160 level, you know, that's it becomes a little more difficult. You know, it's a position that I believe you have to own in your portfolio, but at a smaller size than what it would have been, call it 6 months ago. But as far as the importance of the company, you know, this is a company that's going to permeate every single aspect of corporations around the world.
Sarat, how are you treating it?
Look, I mean, I think we're more value-based in terms of cash flow-based, so it's hard for us to get our arms around it. It's a great company, but, you know, you get any bump in the E where something kind of hits it from the left side. We just worry that valuation is so far ahead of itself on its price to sales, and we've seen these stories before. So, you know, to get off the train when it's about to go down is very hard. But you know, those who are on the ride, it's great.
Look at this, though, up about 550% in 1 year. I want to ask you, James, if we can, about Tesla. Elon Musk again in the news about getting this new pay package, at least sort of this interim agreement internally. But, of course, there's some asterisks because of the battle over the last pay package, which is still being debated in court. But I guess a key part of this also stems that in order to get it, he's got to stick around as CEO. And if you are a Tesla lover, you probably love to hear that, right?
Yeah, I think it's a good thing, and I think, you know, he deserves it, as controversial as he may be. You know, I think it's a good thing for him to remain at the helm of Tesla. I know there are differing opinions on that, but at the end of the day, Tesla is actually one of those only companies, one of the very few companies, I should say, in our portfolio that you have to take a longer-term view because of so much optionality embedded into the company and kind of look past the near-term kind of challenges as it relates to auto sales.
And challenges, there are many. Sarat, what do you think about this name? Short-term, long-term, you pick.
Yeah, I mean, I think the days of the car Tesla are past us. So yes, it's optionality, whether it's on robotics or it's on, you know, they're going to compete with Waymo. So yeah, it's a speculative part of the portfolio. And I think if you want to play that part, you can, but just knowing that sometimes there might not be a future, or, you know, he's such a smart person that something could come out of it. But no, it's speculative at this point.
James, Apple had a bit of a narrative shift, arguably, last week with earnings. Did better than a lot of people expected, despite their AI issues. When did you buy it? Why did you buy it?
We bought it a couple of weeks ago. Basically, we had sold it, you know, the day before we were on your show. And we bought it back a week or two later because the earnings estimates overshot so much to the downside. We saw that the risk-reward balance was much more favorable. But I'd say, you know, bigger picture as it relates to tech, you know, the valuations, this entire run has really been about multiple expansion and not earnings expansion. So things are really, really starting to get frothy here. So as we think about that dynamic in the market, you know, where are the places that you want to hide? It's the companies that have the most visibility, the most recurring revenue, and the ability to sustain the growth rates that you're seeing today. And that's companies like Apple, Spotify, Netflix, and so forth.
Sarat, you're not hiding in Apple. You're still selling it?
Yeah, we've been using it for more source of funds because one of the things, I mean, multiples at 27 times earnings, which is pretty rich. And yes, you can consider it a staple company. But the fear is that it has such high margins, and we've talked about tariffs before. And if they're not going to actually be able to avoid all the tariffs, because to be able to build in America is going to be very expensive. So I think you're going to, it's not that I don't believe that they can grow forward. I think the expenses and the cost of goods sold are going to be very hard for them, at least in the near term.